Okay, today we're doing club accounts. This is going to be based on the 2008 exam paper question. So this is the question that we have here in front of us. We've got the standard part. At the beginning of the question we have information that is relevant to the beginning of the year, so we can work out how much money has been invested in the club over all years up to now, and now in this case is the beginning of 2007. So all of these are going to be included in our opening accumulated fund. It's kind of like capital for a business. The accumulated fund is the money invested in the club. Then we need to work out our income and expenditures. A lot of the income is going to be here, a lot of expenditures are going to be here, but not all of these are going to be income and expenditures. Remember, an income or expenditure is ways that money was earned by the club or used up by the club on a regular basis during this year. Not one-off things like, for example, down here we bought equipment. That's not going to be an expense. The depreciation of it is. And then if there's something like a bar mentioned, and here we can see there's bar purchases, we'll have to do a trading account to work out the profit on the bar. Okay, so we start, we have the blank document, okay, the trading account down here, and then I've got the accumulated fund and the income expenditure account. So we go back to the name of the club, and it says the Bards Valley Golf Club, so accumulated fund of Bards Valley. Okay. You do get marks for labelling this, as with any other question in the exam. So the accumulated fund is always, or a balance sheet the same, is always at a specific date, whereas the income and expenditure account is going to be for a period of ending in a certain date of Bards. So we're going to be the year ending 31st of December 2007, because this accumulated fund is for the beginning of 2007, starts at 2007. So we look at the top of the question and we have the assets and liabilities. So clubhouse. So clubhouse is 750. Bar stock is 7,000. I might as well put this bar stock straight into my bar trading account. This is the standard layout for the trading account for junior cert, but there will be modifications go through it. So for example, bar sales, we will have opening debtors and closing debtors. That means that people owed us money at the beginning of this year, so when we calculate our bar sales, we'll have to bear in mind that some of that money was nothing to do with this year, it's to do with last year, so it'll have to be taken out. We'll come back to that again. So bar stock, equipment is 26 grand. Just having a look for provision for depreciation. Is there anything mentioned for the equipment? No, they're listed. Life membership 40 grand. So life membership is money invested in the club by members for a long period of time. So rather than being a regular income that we get on a regular basis, this is a one-off income that we're going to use for a long period of time. So that's why it goes in finance by and not in the income and expenditure. Bar debtors is 535. Now that 535 is money owing to us at the beginning of the year. So that money has nothing to do with this year 2007, it's to do with the previous year, so I'm going to take it away. So less opening debtors, and then the closing debtors will add on. So this is money that should have been paid during this year but wasn't. So notice I'm doing two documents at once. When I've got one piece of information and it goes in two places, I'll put it in both places at once so I don't forget it. Okay. So then back up here it says bar creditors is 6 grand, so that's a liability, money that our creditors are owed by us. And we'll go back down to our bar trading account. So our bar purchases, including our bar purchases, would have been money that we owed from last year, so we take that away. and that money is 6 grand. And then minus 535. Levy reserve fund. So levy reserve fund is our liability. A levy basically is where we've had to charge everyone a certain amount of money to cover something like a financial difficulty that the club has had, or to pay for major expansion. Life membership is something that's voluntary for members, that you can choose to buy life membership, but levy reserve is something that's charged to everyone. It's involuntary, but it's financing the business, or financing, sorry, the club. Investment interest receivable due, so that's money owing to us, so I'll put that up here as an asset. $400. Now that would mean to me that we must have also had an investment, so I'm going to write in investment. Now we don't know how much the investment is worth yet, but if we were owing money from an investment from 2007, then it's logical to assume that we must have also had an investment which is an asset. So this is a current asset, which is money owing to us. This is the long-term asset where we've invested money for a long period of time. Wages due 2,500, that's a liability. Subs received in advance. This is prepaid subs. So is it an asset or a liability? So this is money that the members have paid us in advance, and the club owes that back to the members. So we owe them money. So that's subs. It's going to be a liability. Okay, so 1,600. Now, so that's all the information I got from the top of the question. And obviously I still have this blank number here for investment, which I'll need to sort out as we go down. Next thing I need to do is look for my bank figure, and in my receipts and payments on the debit side I got bank current account 14 grand, so that's going to be an asset. It's just the balance we have in the bank. Then I look and see, has anything else happened in here, and I see mentioned in the receipts side 5% government investment 1,600. Now that means that we received 1,600 and we had investment interest receivable due 400. So included in the 1,600 there was 400. This figure that I had up here, that was due at the beginning of the year, so that was to do with last year. So that means that when I come to work out my incomes, I'll have investment. So the investment income is going to be 1,600 that we actually received minus the 400 that was owing from before, so that figure is 1,200. Now, that figure 1,200 represents 5% of the original value of the investment. So if the 1,200 is 5%, then the investment itself must have been 1,200 divided by 5 makes it 1%, okay? And then so 1,200 by 5 is 240, so that means if you multiply that by 100, that gives you the original value of the investment. So that's 24,000. Okay, just say that again. The income that we should have received is 1,200. We actually received 1,600, but that 400 was owing from last year, so we only actually received 1,200 for this year. That represented 5% of the value of investment, so therefore the investment must have been 24 grand, or 20 times that figure, because 5% is 1/20th of 1,200, or of the overall investment. Now, moving on. We now look for our loan. These questions are very predictable. There is always going to be a loan. I'm going to put my loan in here now. And there'll have to be interest on the loan. And usually there's interest due, and there's going to be an expenditure over here of interest. And this one here is the interest we used up during this year, and the interest due is the amount that was owing at the beginning of this year. So it says we repaid a 30,000 euro loan, so I'll put that in. So the loan itself is 30,000. The interest due now. It says together with 1.5 years interest, and we repaid it on 31st of the 5th. So 1.5 years is 18 months. So we paid 30,000 loan. 3,600 was the amount of interest involved, and that 3,600 is 1.5 years or 18 months interest. So 5/18 is going to be used up during this year. So I'll put it over here. So the formula is going to be 3,600 multiplied by 5/18, because the interest itself was for a total of 18 months or a year and a half, and 5 of those months is going to be used up this year, and the remaining figure is going to be the interest due that goes in here, which is for the remaining 5 taken away from 18, 13 months. So that's 2,600. So now we've dealt with the loan and we've dealt with the loan interest. Now we look at the bottom of the question and see, is there anything else that was relevant for last year? Last year being 2006. And we look in the subs area. Is any subs money that came in that was to do with last year? And we see that there is a levy of 250 on 10 members for 2006. So that means there must have been a levy due, and this is money due to the club. And that will be 2,500, which is 10 times 250. Okay, so that's all of the incomes and that's all of the liabilities. Now, obviously I can add all these up now and I get a total, but I'll leave that for a minute. Next I'll move on to my bar trading account, because I'll need to work out my bar profit before I can move on and start doing my income and expenditure. So my bar sales is bar receipts, which is 110. How much? 110,460. We've already taken away the opening debtors and the closing debtors. This is extra money we should have been paid that we have not yet been paid. We add that on. So bar debtors is 275. So adding those numbers together, that's the figure we should have got for our bar sales. Bar purchases then is 78,500. Take away our opening creditors, and we're going to add on our closing creditors. So closing creditors is listed at 3,220. So we'll add all of our the bar purchases along with the closing and take away the opening. So we'll add these together. So the opening bar stock plus the real bar purchases, take away our closing stock. Closing stock at the end is 8,500, and that gives us the cost of goods sold. And we then subtract the cost of goods sold away from the figure above, and that gives us our bar profit. So that then we're going to put into the incomes. So let's look at the rest of our incomes. We have the investment already mentioned. We've got entrance fees, 15 grand. Catering receipts, and there's catering costs. I'll put the two of them together and I'll work out the profit, catering profit, which is 14 grand, take away 8. Annual sponsorship, 25 grand. Subs. Now, subs is one that's going to involve a certain amount of calculation. So what I might do is maybe go down the bottom and I'll work at my subs here. So we start off with 250 grand. So that's the figure that came in for bank. And we look at the top. Were there any subs that were relevant from last year? And it says subs paid in advance 1,600. So that was paid last year for this year. So it's subs for this year, so we have to add it on. So we add our prepaid, or opening prepaid, I'll call it. And that is 1600. Then it says down the bottom of the question, subs include a number of other things which are not relevant to this year, so I'm going to have to take that away. So we take away the life membership as one life membership, bringing the total to 21. So how much money do we get in? It says at the beginning of the question that the life membership is 40 grand, and we've just received another life membership bringing the total 21. That means that 40 grand must have been for 20 people, so everyone paid 2 grand. So we're going to take away 2. So that then would be, if we were doing a balance sheet, and this question we're not asked to do a balance sheet, then we would take that away. Subscriptions for 2008 for 26, so that's a prepaid. So for next year, and how much is it? It is 2,600. Then we got a levy for €250 on 200 members. So that's nothing to do with this. This should be added into a levy. So that's 250 multiplied by 200 members. And then we've got a levy for 10 members from 2006. And we already saw that. That was the 2,500 we had already. Minus 2,500. And that one there should be minus 50 grand. So adding all those numbers together, that's going to give me the real figure for subs. Okay, now moving on to our expenditures. Bar purchase we dealt with already. Catering costs we dealt with when we worked out with our catering profit. Sundry expenses 186,400. Equipment, no, but there will be a depreciation on equipment, which will, I'll write it in here for now, we'll come back to it again. Golf lessons for teams, 4,600. So repayment of loan along with interest, so we have our interest up there, we've dealt with that. Transfer to a building site, that's just taking money out of one bank account, putting it into another. It's not an expense or an income. Okay. And then just looking at the adjustments that we have at the end. So we have bar stock we've dealt with. Equipment owned at the end is depreciated 20% of cost. So how much equipment do I own at the end? At the beginning I had equipment of 26 grand. I didn't sell any equipment. I bought equipment for 45. So 26 and 45 is 71. And that's depreciated at 20%. So depreciation is 71 grand multiplied by 0.2, that's 20%. Clubhouse will be depreciated by 2%. So Clubhouse is worth 750. So that's going to be 750. Multiply by 0.02, which is 2%. And now the last thing then is the life membership is to be written off over a 10-year period commencing in 2007. Now, writing off life membership. Life membership, we said, is a liability. We're going to start cancelling that liability. Now, if that was an asset, to start writing off an asset, that's depreciation. So that depreciation is put in as expense, but because we're cancelling a liability, that's put in as an income. So add up here. So life So the life membership over a 10-year period, starting 2007, which is now. Life membership at the moment is, at the top of the question it says 40,000 plus there was one more member this year, so that makes it another 2 grand has been added to that, so that's 42,000. Writing that over 10 years, so that means 4,200, or 10% that has been written off this year. Okay. At this stage now, all you do is you add up all of your accumulated fund, take away your, so if I add all these, I might as well do it now. So add up all of my assets, add up all of my liabilities, and again, this is something you only do in the exam if you have time. You've now got 90% of the marks already by just putting the right numbers in, and you only do this extra bit if you have the time to do it. So add up all of our incomes, we add up all of our expenditures, and then we end up with a surplus. Okay, that's the basis of how to do it. Remember, you start by laying out the blank document as we usually do, then put the numbers into the relevant part of the question, and if you're putting the number in and it goes into somewhere twice, you put it into the second account at the same time so you don't forget it, and then you only do the maths on it if you have time at the end. Okay, that will do you. Thank you.